Your credit card company just made $412 off you last month, and you have no idea how. Here's the mechanism. They spent billions designing to keep invisible. American credit card debt just crossed $1.1 trillion, the highest in recorded history. And here's what banks discovered 40 years ago. They don't make money when you pay off your balance. They make money when you stay trapped in the minimum payment cycle forever. Let me show you the exact psychology they engineered. You have a $10,000 balance. The minimum payment is $200. Feels manageable, right? That's intentional. Here's what they don't show you on the statement. At 18% APR, if you only pay minimums, you'll spend the next 43 years paying off that card, and you'll pay $28,000 in interest, nearly 3 times the original debt. But it gets worse. The minimum payment is designed to barely cover the interest. Your $200 payment, $150 goes to interest. Only $50 actually reduces your balance. You're not climbing out. You're running in place while they extract wealth month after month. Second mechanism, the anchoring trap. When you see that minimum payment amount, your brain anchors to it as the correct payment. Behavioral economics at work. Banks tested this relentlessly. They discovered that showing a minimum payment reduces the average amount people pay by 62%. You are going to pay $500, but once you saw the $200 minimum, suddenly $200 feels responsible. Third mechanism, the grace period illusion. You think you have a month to pay, but interest starts accruing the moment you swipe. They just don't tell you that prominently. By the time your statement arrives, you've already accumulated 19 days of compound interest. The game was rigged before you even saw the bill. Fourth mechanism, the credit limit psychology. They keep raising your limit. 15,000 becomes 20,000 becomes 30,000. You think it's because you're responsible. Actually, it's because their data shows that when people have higher limits, they spend more and carry larger balances. More balance means more interest. More interest means more profit extracted from your future. Here's the part that separates the 1% from everyone else. Wealthy people don't avoid credit cards. They use them strategically and pay in full every single month. Cero interés, the maximum rewards. They're extracting value from the bank instead of the bank extracting value from them. But here's what sovereign operators understand about the debt trap. You can't budget your way out of a system designed to keep you in. You have to break the mechanism entirely. The 90-day protocol. Stop using the cards immediately. Take every extra dollar and attack the highest interest rate first. Not the smallest balance, the highest rate. That's where the extractor is most aggressive. Negotiate rates down or transfer to 0% offers. And here's the key. Never make just the minimum. Even an extra $50 per month cuts years off the timeline. You're not bad with money. You're fighting a system designed by PhDs in behavioral psychology whose only job is keeping you paying interest forever. This is Bold Bucks. We expose the mechanisms that extract wealth from the 99%, while the 1% plays a completely different game. If you understand that financial systems are designed, not natural, you're already thinking at a different level. Subscribe to confirm it.